All right, good morning. This is More Coverage, Less Underwriting, presented by Brian Lysing. I'm a CLU, CHFC, CASL, and life insurance marketer at Financial Brokerage in Omaha, Nebraska. If you're not familiar with Financial Brokerage, we are a national life insurance, annuity, long-term care marketing organization, and I'm one of our life specialists over here. This morning we're going to talk about a dirty word when it comes to life insurance, and that's underwriting. It is a hindrance to a lot of sales, makes our jobs a little more difficult from time to time, I would say, but we're here to make your life a little easier. We're going to see if we can find some ways to help you reduce the role that underwriting plays in the whole process of giving your clients more life insurance. And there's really about 3 ways that I'll talk about this morning to do that. And let's see if I can work the computer. We'll start moving along. There we go. So 3 main methods of finding ways to give your clients some life insurance coverage while minimizing the role of underwriting. We're going to talk about what I call upsale programs. And these are things where it's pretty passive on your part. You don't have to do a whole lot, maybe just respond, but that means that you're using the right insurance company from the start, and we'll let you know who those are. We're going to talk about ways to get your clients coverage with no exams. Now, this doesn't mean no underwriting. They will still be underwritten, but less of a hassle for everybody involved, and there's lots of different ways to accomplish that. And then at the end, we're going to talk about conversions. And a lot of folks know about conversions and have converted term policies before, but there are some interesting, maybe even oddball ways of doing some special programs a few companies have that aren't available to everyone, and most folks really don't know about. So why not take advantage of that? Because once again, you can get your clients more coverage without having to go through more underwriting. So let's start with the upsales, and there's really about 4 of them out there that we're going to get into. And I'm going to start with Voya. For those of you who aren't familiar, Voya used to be ING, and before they were ING, they were ReliaStar and Security Connecticut and all that. So the company goes back a little ways. But if you can take a shot of the screen here, you'll be able to get to that link that's embedded. I'm not sure if it's going to work on my webinar here or not, but Voya has something which I think is really unique. They have what they call the Life Capacity Calculator. It's a financial underwriting calculator. So here's a situation where this might come into play and how it can help. Maybe you've done the needs analysis with your client and decided that they need $1 million of coverage in their situation. And they're okay with that. They agree, and you plan to apply for $1 million. Well, take a moment and plug their information into Voya's financial underwriting calculator, what they call the Life Capacity Calculator. And based on their age and their income, it's going to tell you how much coverage they could potentially apply for and qualify for, and that Voya would issue to them. And so in most cases, we find that clients are underinsured. Even though you've done the needs analysis, the company would actually approve them for a lot more coverage. An interesting thing to do there, too, would be to add 10 years or 20 years to their age and see how that changes the number. Look, if your client thinks they're going to need more coverage down the road somewhere, they might not be able to get it. They can get it now, though. And that's how this calculator works. So your clients are in control of their insurability. When you're younger, you can get a lot more coverage than you can when you're older, given the same financial situation anyway. So really easy to use. But again, take a screenshot of that, and then you'll have the link in there. I can email it to you later. A couple of our carriers here have what I call upsale programs built into the underwriting system. Now, these are passive, meaning as a producer, you don't have to do anything. So say you're running a term insurance comparison quote here, and Banner Life and or SBLI come up near the top. Maybe they're not number 1. Now, chances are they're going to be number 1, but maybe they're not. Well, you might want to choose them over another carrier because of this program here. Now, what happens is once the case gets into underwriting, the underwriter is going to take a look at it, and kind of like with what Voya does with their Life Capacity Calculator, the underwriter is going to say, well, you know what? We think that financially this client qualifies for a lot more coverage than what they're applying for, and they've also done all of the exam work, and we've done all the underwriting we need to underwrite them for this higher amount. Well, we're going to send you, the producer, an email saying, look, we've decided your client could actually get $1 million instead of $500,000 you applied for. Would they like that? We'll approve them at it. No problem. I mean, isn't that a great conversation to have with an underwriter, great email to get from them? Usually they're telling you the exact opposite. Here, with these two companies, Banner and SBLI, in some cases, they're going to want to give your clients even more coverage. So that gives you an opportunity to call the client and have that conversation with them and probably make a bigger sale than what you thought you were going to make there. So again, passive, nothing you have to do, just choose one of those two companies, and it may happen throughout the process. Also, a little warning, they don't give you much time to make that decision. I think it's about 3 days or so, and you need to respond back to them rather quickly, or the offer is off the table. So if prices are close, you might want to steer towards Banner and Upsales. And then the other way to upsell your client is to put on a guaranteed purchase option. Now, this is typically found on UL products, not necessarily on term, but this rider gives your client the option to purchase additional coverage at specified times in their life without having to go through additional underwriting. Now, most carriers do pay commissions when the client exercises that offer. So it's another passive step you can take. Again, the client's going to get a letter from the company. In a perfect world, you're going to get copied on that letter and have a chance to speak with your client, but maybe carriers won't do that. Who knows? But your client can send in the extra money, say they want additional coverage, and again, they don't have to go through underwriting to do this. They'll get an offer about every 3 years, and again, you may see yourself getting an additional check for that additional coverage, and you didn't have to do a whole lot for it. So don't forget about the guaranteed purchase option, available generally for clients under age 40 on permanent plans. So those are all the upselling opportunities. Again, most of those are pretty passive. You don't have to do a whole lot. Just choose the right carrier up front. Now I want to talk a little bit about life insurance policies that are underwritten, but they don't require an exam. Your client doesn't have to get stuck with the needle. Who likes that anyway? Nobody does. And some of these are rather obvious, the accidental death policies and non-med products. But some of our carriers here at Financial Brokerage do offer fully underwritten products without an exam. So different than non-med, and we'll, as we get into the details, you'll see how that's a little bit different. But I want to start off with accidental death. This is something we don't see a whole lot of necessarily, but there are no medical questions for an accidental death policy. There are lifestyle questions, but no medical questions. You can have a client with AIDS or 12 forms of cancer and a heart attack, and they can receive an accidental death policy. This works very well if you have a client who's going to be highly rated or has been declined through the full underwriting process. This also works well as a door opener type product, particularly for property casualty agencies. If you sell auto and homeowners insurance, guess what? You probably know how many motorcycle drivers you have on the books, how many folks have jet skis, and how many farmers and heavy industrial machinery folks you have in your book of business. Those are great folks to market accidental death policies to. You can do an online app. Again, no underwriting. You're probably going to get paid in 72 hours, so you have nothing to lose, really. So don't forget about accidental death. Simplified issue or non-med term, also final expense or non-med whole life is something we see from time to time too. These are typically smaller face amounts. They're going to be smaller sales, but it really makes the process a lot easier. Think of a less sophisticated client, and some of those folks, boy, if they have to go through a full exam and sit down for a whole bunch of questions from a nurse and get their blood drawn and all that, they just might not be interested anymore. Or a lot of folks too are pretty busy. They don't have time for all that. You know what? Selling a simplified issue term, you're not going to get a whole lot of coverage per carrier, but you could stack them. You could sell 4 simplified issues at $250, and now your client's got $1 million worth of coverage. These things also work well if your client is overweight, if they're maybe a well-controlled diabetic, and we know they're going to be Table 2 to Table 4. These ratings are already built in to the simplified issue products. Look, if you know you're facing a table rating, why put your client through all that hassle? Just get them the simplified issue product right from the start. There's nothing wrong with that. They're going to pay about the same as they would have anyway, and you're going to get paid faster. Makes a lot of sense. Same thing primarily with seniors. We're looking at burial plans, final expense policies, do not require exams. And a couple carriers have got whole life products, believe it or not, that will go down into very low face amount ranges. They can mimic a final expense policy down to $10,000 in some cases. But with a fully underwritten whole life that doesn't require an exam, client's going to get a little better price, and they're going to get much higher dividends than they would with a comparable final expense product. So if you're considering final expense, let's look at some of these no exam whole life products as an alternative. A little longer application, but still no exam. All right, now we're going to get into the special programs that just a few carriers make available to offer their fully underwritten products without that pyramid exam. And the most popular one by far comes from Transamerica. They call this their top program. And it's really meant for topping off existing policies. It's not meant as a replacement program or anything like that. But the way it works is if your clients have an existing term policy that was underwritten in the past 5 years, now it does have to be with one of their list of approved carriers, but that's usually not a big deal. If your client fits the age requirements and the face amount requirements, and they were not table rated, you know what? They can get a new Transamerica term policy to top off their existing plan. They'll match the same face amount. They'll match the same rate class they have on their existing term from another carrier. You still have to answer the questions on the app. They'll still check the MIB. They'll do a prescription check, but they will not make your client go through a new exam. Heck of a deal, and really speeds up that underwriting process. Similar to what Transamerica does, we have Principal, and they have their accelerated underwriting program. Now, this doesn't necessarily require that your client have an existing policy. It's designed just for people that you think through pre-screening would be a preferred or a preferred plus risk. If it comes back and Principal thinks they're going to be standard, then they may call for an exam later. But at least from the get-go, for your healthier clients, if you try to place them with Principal, you can avoid that pyramid exam. Up to $1 million. It could even be permanent coverage in this case here. But the underwriters want to really accelerate that whole process and not put your client through a whole lot of hassle if they're in great shape to begin with. And joining those two carriers, we also offer MetLife, and this is pretty interesting too. Similar to the others, underwriting is just based on a phone interview, MVR, prescription database, and all that, no exam. But on top of that, if your client is at least standard or better, if they go through this system, they're going to move them up to a preferred plus rate class. Now that applies to their 10-pay whole life for sure. So you have to have a client that's got some money and wants to sock a lot of it away into a whole life product. But you can also utilize this on their current assumption UL product, which they call PAL. I forget what it stands for. But real quick underwriting turnaround here with MetLife. And again, I would use this for clients that have got some extra money they want to put into a policy. And I don't want to forget too about American National and their underwriting express system. This is a little different than what I would call the non-med terms, in that they don't have table ratings built into their prices. If you're looking at a standard rate class, whether you have non-smokers or smokers, American National for term insurance is priced right up there with the best of them. You're going to see them in the top 4, top 5 when you look at standard rates. And with American National, again, if they're close, look, you can avoid that exam. They tout the 72-hour underwriting turnaround just off of what they can find electronically on your client. Now, keep in mind, they may come back if they see something out there they don't like. They may go back and say, well, okay, we want an exam on this client, or we're going to order an APS. That's a possibility. but by far, most of those cases go through without the exam. So a little better than non-med term. Maybe not quite as good as, say, Transamerica's top program because we're not getting preferred rates here. But if they're standard, it's really a heck of a deal to look at. All right, so we've covered upsales. We've covered special underwriting programs to avoid exams. I want to talk a little bit about conversion options. Now, conversions, unless you have existing clients and existing business on the books, this isn't going to help you with new business right now. It's going to help you with new business next year, in 5 years, in 10 years. And I tell you what, a lot of the folks I speak with on a daily basis, this is how they make their living. They've been in business 20 or 30 years and keep conducting the annual reviews like we were all taught in our first day on the job as an insurance agent. You want to do those reviews with your clients every year. So many people don't do it. It makes a lot of sense if you've set things up here for the conversion opportunities down the road. So I'm going to start with probably the most boring option out here. It's a traditional conversion, and this is something we all should know. If your client has a term insurance policy, they can convert that or turn it into a permanent plan for any reason during that level term period, provided they haven't turned age 65 or 70 or 75, depending on the company you're using there. They don't have to go through an exam to do this, and they can turn that temporary policy into one that's going to last them their entire life. You as a producer receive a brand new commission on this. All you have to do is fill out a little bit of paperwork, and you don't have to worry about the underwriting at all. Only downside of this is, you know what, we don't know what the carriers are going to offer for permanent plans at the time your client wants to convert. It's about the only downside, but they are guaranteed the ability to get whatever permanent plan the carrier offers at that time. So you can set up a future sale that way. One company to look at, if you think this is going to be in the cards for your client, you may want to consider Mutual of Omaha from the start. And here's why. I mentioned earlier that these term policies are convertible for the entire level term period. So if your client has a 10-year term, guess what? They can convert without underwriting in 10 years. They hit year 11, forget about it. Well, Mutual of Omaha gives them a lot more time than most carriers. See your clients in year 11 or 12 of that 10-year term, and they're paying the annual renewable rates. I don't know why they do that, but some people do. They can still convert to whatever permanent plan Mutual of Omaha makes available at that time. So just a fantastic bonus to your clients. That only applies to the 10, 15, and 20-year products out there. The 30-year, they're still waiting on that change. Other interesting thing, as of right now, Mutual of Omaha does have a chronic illness rider on all of their ULs. It's just built into the contract. That means the client can access part of that death benefit if they have lost 2 of 6 activities of daily living or have severe cognitive impairment such as Alzheimer's. It's very similar to a long-term care rider, and qualifications are almost exactly the same. So that's built into their ULs. They can have a Table 10, a Table 16 rate class on their term, and Mutual of Omaha can't do anything to stop them from converting to a permanent plan that has this acceleration rider on there. So great option. Again, if prices are close, you think conversion is going to happen down the road, give your client even more options by using Mutual of Omaha. Another interesting conversion option here. This is something I think most people don't know about. And I'm talking about return of premium term insurance. Now, by definition, we know what happens. You get to the end of the term, and you get your premium returned to you. That's pretty simple. Well, these return of premium policies actually give your clients 3 options as they get to the end of the term, or in some cases before they get to the end. So here's the example we're looking at here, and it couldn't all fit on one page and have you still be able to read it. So we have a 35-year-old male in great shape looking for $500,000 of coverage, and it's going to cost this guy about $80 a month here for this 30-year return of premium. Well, here's the options with Voya, at least. Our gentleman's paying nearly $1,000 a year for the next 30 years. Well, at the end of year 30, the obvious thing this person can do is take their premiums, which amounts to $27,150. Hey, that's great. He's happy. He can buy a used car or something. I'm sure the cost might be what you could buy a used car for in 30 years. But he has a couple other options. One, he could take that money, and since he can still convert, he can put that into a new permanent plan that Voya makes available at that time and use that to reduce the premium that he would have to pay for continuing his $500,000 of coverage. Or the third option, he can take a reduced paid-up policy. In this case, it's just over $52,000. That's what that 27 grand buys him at age 65. He can just tell Voya, yeah, I want the reduced paid up, and he doesn't have to do anything else. Doesn't have to pay any more premiums. He doesn't get his premiums back, but he has a fully paid up $50,000 death benefit sitting out there. And 30 years from now, that's probably a burial plan. But you know what? At least he's got it, and he doesn't have to pay anything for it. So this could really be an all-in-one sort of product for the right person who needs a lot of coverage in their younger years while they have a mortgage and an income that needs to be replaced for children or a spouse, and then it can morph into this final expense or burial plan in their later years when their needs have certainly decreased. Now, there's another way to go about this too, and this is kind of interesting. We see a lot of protective life being sold for this little idea I'm going to go over. Now, protective is rather unique with their term products, in that they're really not term. They show up on the term quoting engine if you've used that on our website, but they're actually filed with the states as universal life contracts. And here's a little advantage to your client. So we've got this, I think the same person here, 35-year-old, great shape, $500,000. He's not paying $80 for that ROP anymore. He's paying about half as much, so almost $40 a month, and this is just 30 years of coverage. So you would think with the 30-year term, get to the end of the term, with most companies, you either convert it to a permanent plan, pay a lot more money, or maybe you drop it altogether, or it goes to an annually renewable term contract. You keep your $500,000, but now your premium goes up every year to match the cost of insurance based on your age, right? That's what happens with every other company out there. Protective's a little different since this is on a UL chassis. And if you can see the print here, we're going to see what happens starting in year 31. So with most carriers, premium would go way up. We'd still have $500,000 of coverage. The way Protective does this, in year 31, your client can keep paying the same $39 and change per month for the rest of his or her life, and the death benefit will adjust to match the premium that is paid. So we take quite a big hit there. The first year we're down to $133,000 of coverage, but look at year two, it's not that much of a decrease. We're down to $121, then $111, $102. It goes down gradually until it finally hits $10,000 at age 90. So around life expectancy is where you're going to see these things bottom out and turn into basically a final expense plan. But this gives your clients some options to have some coverage in their later years without having to deal with an increase in premium. They certainly don't have to deal with any additional underwriting. And this, again, it's another way to give them build in a permanent plan into the short-term term product you sold them earlier. And again, one of these situations is going to work for just about every client or prospect you come across. They're not going to work for everybody, but you're going to find something for somebody out there, that's for sure. And I don't want to forget, too, about child riders. A lot of folks will put these on term policies on parents. It's a real economic way to give coverage to children, especially if there's a lot of children in a household. We typically see $15,000, $20,000. When the child hits a certain age, they can convert that to a permanent plan without having to show evidence of insurability. And oftentimes they can convert up to 5 times that amount. So they start off in life having some sort of life insurance coverage at least. And I don't want to forget, too, about MetLife's external conversion program. And usually when we talk about converting, we're taking one company's term and converting it to the same company's permanent plan. MetLife will actually let you convert a different carrier's term into one of their permanent plans. It does have to be a company that's on their approved list, and up to $1 million standard or better, and that term policy that you're converting has to have been issued sometime in the last 5 years. Now, this sounds an awful lot like that Transamerica Top program I mentioned earlier. And the criteria are just about the same. Only difference is this is a true conversion. We're going from an existing term to a permanent plan, and we're getting rid of that old term. If you remember back at Transamerica, it was term to term, and we're keeping the old one. So this is a little bit different. This is a true cross-company conversion program that MetLife makes available. And for just another 6 weeks or so, we have something very similar available through Lincoln Financial. You can convert another carrier's term to their UL or IUL. You have a lot more flexibility with the face amount here at Lincoln Financial, all the way up to $2.5 million. Well, the policy that you're converting from has to be a little younger, no more than 3 years old. And again, their offer is going to expire for this at the end of December. Everything else continues until the carrier tells us otherwise. So to recap, we really discussed 3 ways to help reduce the role that underwriting plays in your life insurance sales. We discussed upsales, which are real passive systems that some insurance companies have available to increase the amount of coverage they're going to give your client based on the underwriting that they've already gone through. So we can get them more for what they've done. We explored lots of different ways to get your client coverage without going through an exam, whether it's an obvious non-med term sort of product or something not so obvious, a special program from one of the companies to help you avoid that exam. And then we talked about some very unique conversion opportunities that some of the companies offer, and really some creative ways to use some existing products to mimic conversions or mimic giving your client some permanent coverage down the road. So that looks like that is the end here. I'm going to go ahead and open it up for questions. And again, you can type those at the bottom of the control panel on your screen.